Hi. Currently, the physics is below the 6,000 level. We had a lockdown in March, and the physics fell to a low of 4,000. That was a fantastic opportunity to buy. Since then, the physics has bounced to its 50% retracement. We had a peak in June at 6,583, but the physics was not able to go any higher. Since then, we have seen a 13% correction, and the trend has been sideways since that peak in June. Okay, this slide would show that we were bearish in February 2020. The physics was then above 7,300 points. What we saw was a sideways chart pattern, and we saw a breakdown. After the breakdown, there's a bounce, but the direction has been set. The likelihood of a huge decline was evident at that time. Next slide. This is the abacus super timer, and note the date. That was February 24, and the index was then at 7,369. Next slide. And this is what happened after the chart breakdown. There was a huge drop, and the index fell to a low of 4,039. And the clients that we talked to on that day were mostly afraid to buy. But I was telling them, if you do not buy at 4,000, you would find yourself chasing the stocks at 6,000. So I was maximum bullish at this level and was able to buy, let's say, SM Prime below 20, JG Summit below 30, etc. Next slide. There was a peak there was a peak of panic sentiment at that point. That was in mid March. That's why we were confident to bet against that crowd. I saw a lot of foreign selling on that day. Imagine the big caps like Ayala Corporation can be down by 22% in one day, and we're talking about big blue chips, and these are not small stocks. Down 22% on that day. I remember. Next slide. On the candlestick chart, there was a bullish hammer pattern. So that was a signal that the market was ready to rally back. Next slide. And here we saw the rally from the low. It bounced almost exactly to the 50% retracement, and we anticipated heavy resistance at that level. Normally, a bounce would find resistance at the 50%, and this is what happened. Okay, next. If we go higher than the 50% retracement, there's another resistance at slightly below 6,800. So if you're formulating your trading strategy, you have to keep in mind that if ever the market rallies, where would we find the next heavy resistance? And there's plenty of resistance on the way up. Okay, next. This is a weekly chart. I normally put in a 10-week as well as a 10-week as well as a 40-week moving average line. I look for the crossovers, and as you can see, the 50-day, the 10-week moving average line is currently below the 40-week moving average line. So the setup is currently bearish. Next slide. Here, this was a chart sell signal on the chart, cross down. Next. So right now we review the moving average line. Currently, the physics is below the 50 and the 200-day, which corresponds to the 10-week and 40-week moving average line. So we can say that the market will have a difficult time going up, and it will mostly stay either sideways to downward bias. Next. We ran a scan the other day, and it shows that the Philippine Composite Index is currently ranked last in Asia. If you can see, the index that has done well are mostly index with a high tech component. But since Philippines were mostly dominated by the old economy stocks, that's why we do not enjoy the same sort of rally that we've seen in other countries. Next. We also run a screen. These are the stocks for trend followers: PLDT, Emperador, Manila Water, Pure Gold, Felix, CNPF, Globe, Nickel, URC, Dito, Now ICT, CHP, RRHI, Meralco. Why are these on trend followers screen? Because we run a screen that shows stocks that are actively traded, and the 50-day moving average line is trading above the 200-day. And these are the only stocks that came up out of 200 plus listed stocks. Next. But a word of caution for those using moving average lines: it does well in trending markets, but during non-trading phase, we can see a lot of false signals. Next. Of course, trend following is just one trading style. Some people doesn't want or cannot bring themselves to buying the strongest stocks. What they want are the cheapest stocks, and these are the worst performers that you can take a look at. Probably concentrate on the more active ones: Macro Asia, SSI, MAC, Holcim, Megawide, Vista, Cebu Air. Okay, those appeared on our worst performing screen. Next slide. Here we have a chart of Macro Asia. It's still down 64%. Some clients doesn't like to buy new highs, and they would prefer buying new lows. And this is something that those bargain hunters would probably be looking at. And to wrap it up, a review of the moving average line would show that the market is below the 50 and below the 200-day below the 50-day and below the 200-day moving average line. This will weigh down on the market. So the support and resistance are shown on the screen. But the final word that I would like to add is the iShares MSCI Emerging Markets ETF, or simply known as the EEM. This is listed in the US. EEM appears to be stalling near the January 2020 peak. This gives me a sense that the time window for Philippine stocks to rally is closing fast. That's all from my end.